Hello everybody, it's Sean Saffel, and I put together this presentation just to go over the CalPERS loan suspension and to kind of cover the facts of the program, what the benefits were of the program, why CalPERS has decided to suspend it, talk a little bit about the negative impacts that we're going to see because of this suspension, and what you can do now as a CalPERS member, and what type of loan programs are still available for you. So let's get into it and talk about some of the facts. Well, the program was launched over 29 years ago. So after 29 years, they've finally decided that they're going to suspend the program. CalPERS members have taken out more than 136,000 loans over that period, with a total loan volume of over 22 billion. The main product type that were the most popular were 15 to 30-year fixed-rate mortgages. And since 2004, the program has been averaging between 1,000 and 45,000 loans per year. Members could borrow the down payment requirement from a personal loan that was secured by the CalPERS retirement account. That was one of the main advantages, in my opinion, to the program. So some of the benefits of a CalPERS loan to the members. Competitive interest rates set by Citi Mortgage on a daily basis. The reduction in lender fees equaled about $1,000, give or take, per transaction. Loan officer compensation was capped on the origination fees at 1.25%, where most lenders really got competitive on this as well, and you were seeing a reduction further than the actual cap, which is 1.25%. Personal loan program that allowed members to borrow the 3.5% required down payment for an FHA loan, and up to 5% on a conventional loan. Partner programs with real estate companies that allowed for a rebate from the real estate commission. This was pretty big and could be used for closing costs to further assist the members, whereas you got the down payment borrowed and then you got some closing costs assistance as well. There was also partner programs with title and escrow companies, and this provided for reduced title and escrow fees for an additional savings on top of the cap loan officer compensation. At one point, they had loan amounts all the way up to the full high balance FHA and conventional limits, which was $729,750 in most counties, which was a huge advantage, which helped members stay out of the jumbo bracket and actually get a really good conforming or FHA rate. And then the DU Refi Plus program for members with no equity. That's the one that allowed for up to 125% of the home's value to be refinanced. Really great program. So why did they suspend the program? Well, they issued official press release, and you can find it on the actual calpers.ca.gov site. I've included the URL right here. And here's what they said. Over the past few years, there's been limited interest among our members in the member home loan program, said George Deere, chair of the CalPERS Investment Committee. This change allows us to redirect our resources and reduce the risk to the fund. Well, they say that there was limited interest, but there was a lot of people that took advantage of this program. I mean, it was a great program. I personally think that the marketing could have been a lot better. I mean, over the 12 years that I've done this program personally, we've on numerous occasions had borrowers come and talk to us and say, I didn't know the program existed. I wish I would have known the program existed when I did my first loan or my last loan. So we definitely know there could have been a better marketing push, and it did really help a lot of people. So what are the two negative impacts? Well, the personal loan, in my opinion, is going to be the biggest impact for CalPERS members. This allowed for members to borrow the required down payment secured as a personal loan from their CalPERS retirement account. Now that this is gone, members who do not have the money for the down payment will need to borrow the money from a relative, subject to lender guidelines, or wait until they have saved enough money for the down payment. See, most of the people that borrowed the personal loan didn't have the capital available for the down payment. So the only other alternative right now, or the biggest negative impact, is going to be the fact that they're not going to be able to get that personal loan, so they're going to have to borrow it or just wait. The reduction of fees is another negative impact. Between the reduced lender fees, the title fee reductions, and the real estate commission rebates, CalPERS members could now pay more for the purchase of the purchase or refinance transaction. And in most cases, they will. I mean, if you look at the reduction in fees averaging about $1,000 per loan, plus title and escrow fees, plus the fact that they were getting money back from the rebate, they're definitely going to be paying more money now for their transaction. So what are some alternatives to the CalPERS home loan program? Well, 100% financing, there are still a few options for a no down payment or 100% financing loans, especially in California. CalHFA, California Housing Finance Authority, depending on if they have the cash available, it's all based on bond programs, and as we all know, the state of California, you never know if they have the capital available. So I put a link to the website there directly. Most loan officers hopefully would know about this program, so you can talk to a loan officer about it, or just go to the actual site yourself and do a little bit more research. CalVet program still has 100% financing if you're a veteran. Same thing with the VA home loan program. This one's not limited to California. It's all 50 states, and one of the best 100% loan programs out there. But you do have to be a veteran and follow all the guidelines as well. And then the USDA home loan program. This is a program that hasn't really been talked much about. I think there needs to be some more information out on this program, but at first glance, you might think that it's rural development, so it's got to be in a rural area. Well, that's true, but if you look at the areas on the website, you may be surprised that in some areas you may be looking at to purchase, you can actually do a USDA loan, and the rates are really good, and the fees are really good as well. So here's just 4 alternatives to the 100% financing program. There may be other ones out there, specific city or county grant programs that may be available in the areas you're looking for, so you always want to look at those as well. But these are 4 core 100% financing options that are still available. And then on the discounted fees, now more than ever, members will need to educate themselves and know how the mortgage market works. Armed with this knowledge, you will be able to better negotiate with lenders and work yourself a good deal. You do not have to take the first offer that a lender provides you. So this is probably the best advice that I could give you right now, is educate yourself on how the process works. Educate yourself on the good faith estimate. Do your shopping on the same day with the same type of program. Know what your credit score is. Know, all your details of your transaction, so when you call and talk to different lenders, you can actually sound educated, be educated, and demand the best possible deal. Knowing how the process works is definitely going to give you an advantage in this market. So CalPERS members, what now? Well, there does not seem to be anything that we can do to get this program back. However, we can educate ourselves and negotiate to get a really good deal. Some lenders that have been faithful to the CalPERS members and this home loan program have produced a similar loan program designed to mirror some of the key benefits. Although these programs will not be the exact same as a CalPERS member home loan program, they are looking promising and will have an impact on members' closing costs. But again, do your homework, find a good lender, negotiate your closing costs and fees, find a good real estate agent, one who may offer to match the rebate that we did have with the CalPERS program. Some of you may have a relocation department within your company, and they may have some agreements with real estate agents that give you back a rebate. Now, I'm not talking about getting the real estate agent to work for free, but I'm talking about just some type of rebate to help you out, especially if you don't have all the money for down payment or the closing costs. If you're short on closing costs or something, this may be the only way to make the deal work. And as always, if you need any help from us, please feel free to contact us if you need any help. My name is Sean Saffel. I've been helping home buyers and homeowners with real estate financing for the last 12 years. My focus is educating home buyers and homeowners to become better mortgage shoppers. This is my new real focus right now, is to really just give you and provide you all the information so you can educate yourself, be a better informed consumer, know what you're getting into, making sure you're getting into the right type of deal, making sure you're not buying too much house, and just arming you with all that information, all the tools so you can make an informed decision. And as always, if you want to use my services, please feel free to contact me. If you like this video, want to know more, please, questions, comments, concerns, ideas, I'm totally open. There's multiple ways to get a hold of me. If you did like the video, please share it, make a comment. We'd really appreciate that. Hope this helps, and I look forward to providing more videos for you in the future.